let's say that I've got a disability insurance for my income in place, and following that I do very well with business and my income goes up, or or we have inflation that becomes substantial and my income goes up and I need a higher level. What happens in that situation? And the flip side of it is, what happens if I'm insured, I'm at a particular income level, and for whatever reason over a period of time my income shrinks? What are the implications of those events on an insurance policy for income?
Well, over the years, as we have experienced with HMOs and PPOs and what's gone on in the medical arena, a lot of doctors' incomes have fallen. And the moral of the story is, when you are underwritten, the policy is based on your income at that time. So you provide your last 2 years documentation of your tax returns, and that's what the underwriting is based on. So if you were to go on claim 8 years from now and your income is dropped in half, you're still going to get paid based on the income that was underwritten. You're not going to be penalized for that if it was a total disability. Now, if it was a residual or a partial disability, it'll be based upon your loss of earnings at that particular time, 8 years from now, if you will. So it depends on the circumstances and so forth. It's the same with life insurance. If you're just an ordinary civilian today and you're insured for $3 million of life insurance, and 3 years from now you decide to skydive and you die in a skydiving accident, they're not going to underwrite you at the time of death or the time of disability. They're underwriting you at the time you apply.
And so therefore a change where you become a skydiver won't affect what took place 3 years ago before you became a skydiver.
Correct.
And in this situation then, shrinking income, I don't have to worry about I paid premiums based on what my income was and I'm covered at that level. The flip side is, if I wanted more insurance, obviously as time goes on and if inflation or my earning capacity goes up, my policy is what my policy is. I'm not getting any more money, even though I may need more because of inflation or because I've grown accustomed to a higher income. But I can come back and ask for a new policy to be looked at to pick up a higher level of income that's now justified. Is that also correct?
That is correct, and one of the options in the contracts is future insurability riders, where you can buy more insurance as long as you financially qualify, regardless of your health. So it's a guaranteed future income option, whereby if you can buy another $10,000 a month of benefit contractually, you can exercise that option every 2 years or 3 years, depending on who the carrier is, without medical evidence. You just have to prove financial evidence. So that's a very important feature in any disability contract when reviewing and educating yourself.
That's an interesting point I wasn't aware of. Is that a relatively standard feature of contracts, or is it a fairly expensive thing to get written in specifically to a contract?
It's an option that's pretty standard. It's not ultra expensive, and most of our younger doctors and clients in their 30s and 40s will max out that option. We'll give you $10,000 a month more to grow into the policy, and the carriers like it because it's guaranteed extra premium in the future too. And it's an easy sale for the agent. Well, I shouldn't say that. It's an easy partnership with the carrier and the client, because they're going to maintain their relationship with the carrier instead of going out and reshopping, because they don't have to do anything to get it except prove financial evidence.
Understood.
That's an important feature. We used to have that in the life insurance industry. It was called the guaranteed insurability option, but the carriers don't have that anymore. They just don't want the risk.
But still available as a disability insurance provision.
With most carriers, yes.